you want to again come back and then see what, when you want to verify what has been said and you want to verify your trades, it will become very easy. So I'm just recording this particular meeting. So what is this pair trading? Pair trading basically is nothing but a very simple technique. I have some theoretical knowledge. Maybe I think it's better you try to get into this initially, and then we'll go into our own system, which we have developed, where everything is automized. So what is this pair trading? Pair trading is nothing but trading neutral to the market direction. Trading neutral to the market direction in the sense, we don't worry about where the market goes. That is, whether Nifty is up or Nifty is down, we don't worry about that. What we do here is we take two pairs, that is two particular symbols, and then we try to trade on them. So how we do, what is this in a theoretical aspect is something like this. It's a market neutral strategy. So there is something as a correlation, something called as correlation. Correlation is nothing but the relationship between two pairs, that is two symbols or two stocks or two instruments, whatever you call it as. Now let's say I have two steel companies. So these two steel companies will be producing steel, and when you see their market turnover or their growth over a period of 10 years or 15 years or 20 years, right from their beginning, they always move in a single direction because it's market demand and market determined business. Now this should be actually moving in a single direction, but whereas at some point of time, one particular script in the same segment, that is, let's say Tata Steel, it moves up, and JSW Steel, which is also into steel, comes down. So this particular divergence is where we enter into a trade. So these are something like, theoretically speaking, pair trading is a market neutral strategy that matches a long position with a short position in a pair of highly correlated instruments, that is in two scripts, that is two symbols, or ETFs, currencies, it can be even commodities, and it can be even options also. In Neutree, what we have is, we have done it for the NSE symbols, and we have done it for even commodities also, like gold and silver, both are bullion, precious metals. So we have correlated data for that particular symbols. Now these, what I'll do is, in case if you have time, you can just send me a mail IDs. So I will send you this complete PPT, and I don't want to keep repeating whatever is typed here. So I'll go into the major aspects of what is necessary to pair trade. So this technology, the talk of this technology, actually pair trading started somewhere in 1980s. It was started by Morgan Stanley when they had that infrastructure and they had that kind of expertise. They actually started in 1980, and over a period of some time they actually disbanded the whole unit. And that happened because of this, the technology. The technology was in a nascent stage. I think I first started using a computer in 1988, sorry. And the first time when I went to and had a glance at the internet was in 1995. Now over the period of 1995 to we are in 2015, around 20 years, the technology has grown leaps and bounds. Now this is something what we have today. Large hedge funds, yes, they do have or institutional traders or mutual fund companies, they do have the resources. The resources in the sense in terms of software and hardware, people, all these things. Now that is also available with a small trader also. You'll have to go and check the NSE site to get the data, the back tested data or historical data for 10 years or 15 years. You are getting it very easily today. Now what else is needed other than this technology is a small amount of knowledge. You'll have to do your own calculations, and then you'll have to get a system. You'll have to design a strategy and make it run for you. That is what we have done. So coming to the next point, Different types of market neutral strategies. You have arbitrage, hedge fund, equity hedge, market neutral, and all these things. We are basically using an pair trading strategy, which is the same as what is mentioned here. And how do you do it? You take, you buy one in a particular pair. You buy one. You go long on one particular symbol, and you go short on the other symbol. I'll show you how real time. This is more of a theoretical knowledge. Maybe we'll skip this. So these are the things. Let me just. And one thing I'll tell you a few terms which you should have in mind. One is a correlation. The correlation is nothing but the relationship between two variables. Variables in the sense of two scripts or two symbols or two instruments. That is what we call it as correlation. So I'll give you a live example of all this, instead of theoretical knowledge. Why is correlation important? Because that works on correlation itself. And in case if you want a beautiful example, this is an example. Like let's say, everyone would have traveled by bus. Now you would have seen this in a real scenario. Let's say a main road along a river. In general, the road follows the river very closely, and occasionally the road must diverge away from the river due to a terrain or a development. Let's say there is a bridge or something like that. That is the spread, that is the difference what you have. And each time this happens, the road eventually should come back to the parallel to the river itself. Now what he means it here is, like let's say Tata Steel and JSW, they are moving along the same line, and due to some factors, maybe let's say JSW, the results were bad, or their fundamentals were bad, or let's say some other financial event had taken place. So eventually JSW Steel will deviate away from Tata Steel. I'm just giving an example. I will show you real trades also. So that happens, and after a period of time again it recovers, and then it again joins back Tata Steel, and they move along in the same direction. Now this gap where they diverge and the gap where they again converge, that is the place where we place our trades. So these are a few examples. I'll definitely send you all this. Determining correlation, again we have certain formulas that we have already done. You don't have to worry about that. We have automated all this stuff. Events that trigger an weakness in a correlation. That is, one is maybe your Fed reserves, or geopolitical problems, or let's say temporary supply and demand changes in one stock, and their financial results, their balance sheets. All these things matter. That is what triggers some weakness in a correlation. The fundamental aspects also, fundamental analysis you have. Now these are the financials that happen in case if a particular correlated pair diverges. Technical factors, you can use candlestick charts, various things, and then you can do it on your own. But we will tell you why you don't have to do all this in another 15-20 minutes. What are the risks? There are risks. It's not like pair trading is risk-free. There are certain risks. And what are those risks? The model risk. We call it as the model risk and the execution risk. These are the two risks that we have. Now, model risk is something called as when you haven't done your calculations properly. That is one thing. And the other problem might be that you wouldn't have expected certain events. Now, in case if you have time, you can just check this LTCM. This is one particular event that happened something like a decade or 2 decades back. Like this particular company went into some trades, some billions of dollars, and suddenly the ruble crashed and the Soviet Union disintegrated, and their whole calculations went up for a toss, and they had to finally shut down, but not that kind of a damage was done because there was a bailout that was done for this company also. You can check this particular event, LCTM. It's a famous event where the ruble crashed like anything. And the execution risk. This is an other risks we usually face in case if you are doing intraday. We usually face this. There is a slippages. Now, let's say I want to buy a ALBK at 106.75, and then I place my trade, but I don't get at that price. I will get it at 106.70. So that 5 paise I have already lost. So that is nothing but the slippage. These are execution risks, which usually happens when there are no volumes or there are high frequency trades happening that you will not be getting your exact price. So these are the two risks that we have. We have some disadvantages in paid trading. Like the first and the foremost disadvantage what we have in paid trading is the capital that is required. You will have to buy. You will have to invest in 2 stocks at a single time. That is for a single trade. Otherwise, in normal cases, like what you do is you either buy a certain script and then wait for your profits and then you exit that particular trade. But here what happens is you buy one script and you short another script. So your margin requirement for that particular trade will be 2 times, and the brokerage also. So that is one of the main disadvantage of this particular system. Now advantages, if you go to advantages, there are numerous advantages what we have, because you are trading like a fund manager. You are trading in essentially 2 symbols at the same time. When one particular script goes up, the other, in case if the other acts as a hedge. So you are basically using an hedging technology here to make profits. So usually your profits are, I will show you the examples of how you make it. And this is profit regardless of the market direction. Let's say Nifty is moving up on, you don't have to worry where Nifty is moving around. So with any kind of a market, up or down or sideways market, you definitely make profits here. Again, the directional risk is also very least here. Smaller drawdowns. Drawdowns are nothing but I will give you a live example. Let's say when we enter a particular trade today, and then the next day we made around 20,000 rupees profit, and the third day it comes down to 10,000 rupees. So it means that your profit has come down to 10,000 rupees now. So that is called as drawdowns. I will show you how to exit that particular. This will be live calls which I will be showing you. Conclusion is nothing but paid trading, market neutral strategy, and all this stuff. So I can send you all this. Now, who are the better people to do that? Any trader who is doing it in NSE and MCX, they can do it. You don't have to be in front of the system all the time, because you won't be getting calls like your intraday calls. And this is mobile enabled, so it's a mobile app also. So you don't need to actually sit in front of a system all the time. So in case if you have a smartphone and Android or Windows based or Apple phone, all the 3 are you can run on all these 3 platforms. So you can trade from anywhere. So that is one of the advantages. And right now in the world there is nothing called as a paid trading strategy on a mobile phone. We are the first to launch it. Okay, what are the advantages of Neutree? Neutree is nothing but the interface what I am showing you here. We have 5 buttons here. I will just come back to this. You can trade like a hedge fund, fund manager, mutual fund company. You will get all this live entry exit signals. It's a mobile app. You don't need any technical analysis knowledge. You have 10 years of backtested data. I'll show you the data, 10 years. Successful regardless of the market direction. You don't have to worry about the Nifty movement. And you don't need to understand any technical jargons other than correlation, winning percentage. I will show you those. So this is how the app look like. So I'll just now shift to the application directly. So this is the application what we have, prologicsolutions.in Neutree/app/homepage. This is the homepage. So you'll be getting your own unique ID through which you can log in. And you have something called as the 5 buttons here, add group. Add group is nothing but we add certain groups. When we have around 150 scripts in the NSE futures option segment. Now we have segregated this 150 into groups depending on their business or services or whatever it is. Now what are these groups look like? Now we have groups like banking. Now banking is one particular group which will have highly correlated case because there are many banks in the F&O segment. The other is the IT. We have auto, nothing but automobile companies. We have auto ancillaries also. Auto ancillary is nothing but your tire companies, your battery companies, Exide or Motherson, Sumi. These companies come. I will show you what are the companies inside all this. Now auto finance is also separately we have done, and that is Sriram Transport and MM Finance. We have the cement companies, electrical and engineering companies. We have entertainment segment. We have pharma, we have power, we have metals, FMCG, oil and gas, infrastructure, real estate, finance, housing finance, telecom, textiles, mining, minerals, agriculture, and we have the MCX bullions. That is nothing but your precious metals, and you have MCX metals also. Now just have a look at this. I'll just be back. Just give me a couple of minutes. These are the pairs that we have in the banking sector. So in banking, we have around, let's say, 21 symbols. So 21 symbols, and I think we should be adding another 1 or 2. So these are the symbols that are added. Now after you have some back button here. Likewise, we have IT. IT has around 8 companies. And remember that we trade in futures, and these are carryover trades. It might be 1 day trade, 1 day carryover, or 5 days or 10 days. It is maximum, it will be 45 days. So these are the groups that we have, and these are the companies that are there in the groups. Auto, we have these groups. And auto ancillary, we have Apollo Tires, MRF, Exide, Motherson, Sumi, these 4. Likewise, we have included almost all the scripts that are there in the F&O segment into some group or the other. Now what we do after this, we have added the groups. I have done, you don't even have to check. I'm telling you the advantages about having Neutree. You don't have to put any symbol into any group. You don't have to think also. We have already done that for you. Now once we do that, what we do is we select all the scripts and then we click on this backtest, and we get the backtest data for last 10 years for each and every script. I have already done that, so I don't want to repeat. It will take some time. So adding groups is done. I have already added the groups. There are around 23 groups which are there. Now after I add all the groups, I do the back testing and I go into the watch list. Watch list is nothing but a place where you can know whether a particular trade is running or a particular trade is expected or a particular trade has closed. So all these 3 information, you will get it in your watch list. And what does my watch list look like? We have these many trades. So roughly around 303 pairs what we have. That is more than 1 year trading days. So these are some of the trades what I will just show you. And you have an option of alphabetical orders. You can go alphabetically and check the trades, and you have that is symbol 1 and symbol 2. Symbol 1 price, symbol 2 price, and we have something called as a plus and minus here. This is nothing called as nothing but we call it as Z score, Z score. I'll come back to that. We have the trade status, wherein we tell you whether the trade is running now or is it expected. Watching is nothing but the trade is expected, so we wait for that. And the correlation is already calculated, so you don't need to do any calculations. And buy entry and sell entry. Now buy entry and sell entry, so I'll come back to this again. Let's say one lot here, one lot plus 18,551 spot. I will tell you the concept about this. And we have the sectors. So you can check all this by the sector wise. So auto, agriculture, auto ancillary, banking. So we have so on and so forth. All the, you can segregate it this way. And last refreshed date or time is that happens in our servers, which are in the US. So those timings are mentioned here. Now in case if I want to select a trade, I can select a particular trade and then add it into my trades. My trades is nothing but the place where I have already taken a trade and I would have entered it. Now let me just come to this. Now let me just go back to the correlation part. Now I have tried to do an ascending order correlation here. I'll try to get the best correlation first and the subsequent descending ones down. Now how do we trade? It's very simple. Whenever you get a trade, automatically your red and green for that particular trade will get activated. Now let's say in case of S Bank and Bank Nifty, it's already activated. So instead of doing that, if I want to check what are the trades that are currently running, I will click on this trade status. So it will give me a list of all the trades that are happening now. These are the trades that are happening now, that's still under trades. And after this are the scripts which are expected to give you some trades. So I will just start with one. Now you can see always you should have your correlation should always be 70 to 75% and above. That is the first condition what you should have. For any pair, your correlation should be 70 to 75% above, then only you enter a trade. I will show you why. And you can see that I have this correlation for Yes Bank and Bank Nifty at 95%. That's a good one. Yes Bank and Axis Bank I have 95.25%. That's very good. Likewise, I have for other scripts also. So I will stop somewhere at 70%. And I won't check the other ones, because if a particular correlation is less than 70, I don't enter the trade. And in case if you enter the trade, what will happen? I will even show you that also. So my first criteria is to have a correlation of more than 70 to 75%. So I click on Yes Bank and Axis Bank. That is a highly correlated pair with around 95%, and correlation keeps changing. It's not constant, it keeps changing every day depending on the price of the two scripts. Now we have Yes Bank. You can see the back tested data is from 2005, July 13th, 2005. That is roughly around 10 years data what we have. We have the first symbol, that is the Yes Bank, and we have the next symbol, that is the Axis Bank. That is the pair what we'll have to trade. And this plus and minus is nothing but the Z-score and correlation and the profit. Now we come back to see when this particular orange and light pink, it means that there is no trade on that particular day. Now we come back, and the right side you see the graph for the last 10 years, how it has moved. So the blue one is the Yes Bank and the brown one is the Axis Bank. So they move in a single direction. At some point they diverge. One goes up and the other comes down, and eventually they meet at one point, again move towards. And now you see this dip. This dip is nothing but the split that happened recently in July. I think it's in July, yeah. That is for S Bank. Other than this, we have the bar graph. I'll come back to this also. Now let me just check what is the current trade that is running. You can go through this number of trades. So at the bottom what we have is the symbol 1, symbol 2, and the number of trades, that is 21 trades have happened since last 10 years. So in this 21 trades, the total profit that we have got is around 6,26,000. And the profit per trade, that is the average profit per trade, is around 29,000 rupees. The percentage of winning trades is 90%. So let's say 20 trades and you have lost only 2 trades. Rest 18 trades were in profit. And the highest winning trade, you'll have to always check this. First you'll have to check the correlation, and the second one what you'll have to check is the winning trades. Your percentage of winning trades should always be more than 70%. 70 to 75% your winning trade should be. And your highest winning trade in this is 95,000 on one trade, and the highest losing trade is 29,000 rupees only. So let's just check. This is a trade which is currently running. I showed you Yes Bank and Axis Bank. So click on the end button. So the call got generated on March 2nd. So the call got generated on March 2nd. So it asked us to do one thing, that is you should buy Yes Bank and you should short Axis Bank 650. 880, that is the price for Yes Bank, you should buy that, and then you should short Axis Bank. So the first day you have entered the trade on March 2nd, your profit is 0, but your Z-score is 2.85. So your call will usually start at 2.7, and some calls will start at even 3 also. So you should always keep a track of this. This Z-score should be 2.7 and above. Once your call gets generated, your call will automatically get generated. You don't have to do any other calculations. Now your call has got generated for Yes Bank you should buy Yes Bank at 880. You should short Axis at 650. Now the first day the profit, that is a March 3rd, you can check, this is the closing price. So it was under a profit of 9,594 rupees. That is on each trade. Now your Z-score, you can see that it actually keeps coming down. 2.8 first day, second day it is 2.02, the third day is 1.75, again it went up, and again it came down, and again it has come down. So your Z-score final target should be 1. 1 is your exit point. So when your Z-score comes to around nearly 1, you should exit your trades. Now you can exit your trade today, that is March 17th. This is the price and this is your profit. So it has come below 1. So you exit this particular trade at this profit, 18,942 rupees. Now how many days did we take this trade? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 days. Exactly 10 days we can exit this trade today. So that is how this whole thing works, and you can see your profit. And in case if you decide that okay, 10,000 bucks is fine with me for one trade, I will exit at the next day, so you can do that. But technically speaking, one Z score is your the final exit. And in some cases you'll have to exit much before that. I will show you some trades of that sort also. So you have done this. 18,942 is your profit. Now what is my investment? How do we invest in this two scripts? Now you can see that Yes Bank, Axis Bank. Now here it is saying that buy one lot. So Yes Bank, you buy one lot. So what is the margin requirement for Yes Bank? I'll come back to this. Now this will again vary from your broker to my broker, because it's finally the carryover margin that you should be asking him. So my broker gives me an S Bank lot at 28,982 rupees for carryover trades. This is the carryover margin and this is the intraday margin. So for intraday margin, one lot of Yes Bank, I will have to have 28,000 rupees in my account. And the next comes your Axis Bank. You'll have to buy one lot of Axis Bank also. Now Axis Bank cost me around 18,000 rupees. That is 18,000 plus 28,000 rupees. I will show you the calculations right here. 18,000 plus 28,000. I am roughly calculating it. So that is 46,000 rupees is my initial investment. Now apart from this, you can see that Yes Bank is 800 rupees and your Axis Bank is 500 rupees. That is the price. Now always whenever you place a trade, your amount investment on one script should be equal to the investment on the other script also. Yes Bank, let's say it is 804. I'm calculating at the present price what is listed here. 804 into 500. So my rough investment is around 4 lakhs on Yes Bank. The same equal amount should be invested even in Axis Bank also. So Axis Bank, what's happening? I am falling short. So let's say Axis Bank now it is at 570 into 500 is the lot size. So my investment in Axis Bank is falling short. So that is the difference amount. 1,17,000 is the difference amount that I will have to extra invest in Axis Bank to make both the investments equal. Now how do I do it? I go and buy that number of shares, that is 176 shares in the spot market. So what I'll do is I'll buy one lot of Yes Bank in futures, and I'll buy one lot of futures of Axis Bank plus 176 shares of Axis Bank in the spot market. So then it becomes equal. That is 4 lakh here and 4 lakhs here. So my total investment will be around 8 lakhs. Now let's say my broker is giving me a margin of 10 times. So that is roughly around 80,000 rupees, or it can be below that also. So the span margin, then it depends. It again depends. Like some cases you can see the span margin what is charged is 7.5%. For some it is 10%. So average you take it as 7%, 7.5 to 10%. My investment is that. So I invest around 80,000 rupees on this pair, and what is the profit I make? So that is 18,900 divided by, say, roughly around 80,000. It's actually less than this. Sorry. So around roughly 23% is my return on investment. 23% is the return on investments for 10 days. So you calculate it for each day or whatever it is. I calculated it on per trade basis. So I have made a rough profit of around 20% on 23% on that particular trade. Now let me just come back. You might ask me, this particular trade has taken me 10 days, but we had a previous day trade also, previously a trade here. So you can see that we had the same call, Yes Bank buy and Axis Bank sell. Now the Z-score started at 3.71 and then it fell to 2.9 and then it fell to 1.18 and then again it rose to 1.37. It came back to 1 and 0.17. Now here my profit is 35,900 rupees. This happened on February 2nd to February 10th. So that is roughly around 1, 2, 3, 4, 5, 6 days. 6 trading days. My profit is around 35,000, or let's say round it off to 36,000. So 36,000 divided by the same, let's say 80,000 rupees is what you have invested in the pair. So roughly around 45% I have made here. And February and we are in March, so in less than 2 months, we have made around 60 to 70% returns. That is within a span of 2 months. 70% returns in 2 months, and then you can just imagine what is the calculation that you can do. So that is one particular a simple strategy. You invest, leave it, and wait till your Z-score comes to this. Now there is another strategy also. I will show you some examples, live examples of that. Now in case if someone has any questions till here. Yeah, David, buy Yes Bank and buy and Axis sell in futures, yes. No. You will have to buy separately again in cash. You will have to sell. You will have to sell Axis. You will have to sell Axis in the cash market. If you have any questions, please type it in the chat box. That you should have an you should talk to the broker. See, this is particular hedging strategy is allowed by most of the brokers. Most of the brokers allow this because you are actually using hedging. But one broker whom I spoke to, he is actually giving me this 80,000 rupees investment for even 40,000 also, because that guy knows what I am doing is hedging. We'll get back to that. I'll get back to that because I'm still negotiating with those people. I'll get back to you on that. So I have just shown you one trade. Now let me just get into the next few trades. Now let me take Tata Steel and JSW Steel, which has the sector is metal sector. Now you can just see again we have the data from last 2005. So you can, I think you can follow this here. You can see that JSW Steel has outperformed Tata Steel at this point of time. Again, you can see the correlation, and you can see the correlation here. They are in tandem and then they diverge. This is where we get the trades. Now let me just check the winning trades. Now the winning trades is 73%. Okay, that's fine. We had 15 trades, 73%. Okay, that is fine. So highest winning trade is around 1 lakh rupees and the highest losing trade is also 1 lakh rupees. But when I calculate this particular strategy, that is, you are taking almost all the trades, you are not leaving any trades. So your overall 73% beats this losing trades. You are seeing the highest winning trades also. Now let's just check what's happening here. Okay, now we have come to JSW Steel and Tata Steel. The call started on February 19th. So the Tata Steel was a buy and you had to short JSW. Now the 3 is the Z score, 3.09. Looking about 2.7 was okay. So we are seeing the trades here. Now at 3 I entered, and then the next day it gave me a profit of around 8,300. My Z score fell to 2.2. The next day it fell to 1.83 and it gave me a profit of 11,400 rupees. Now this downtrend in the Z score from 3.0 to 1.8, it's more than 1 point. Now you just check the further coming trades. The Z score has increased and so your losses are also accumulated here. And overall the Z score now is 1.62. So our exit will be 1.0 or 1.1. That is our final exit. So the losses has actually come down to 3,500. But whereas you have already, on the second day itself, you have already made a profit of 11,400. Now you know that your winning trades is not near 90% or 100%. So in this kind of trades, what you do is you have a very simple strategy. Enter in 2 lots. Enter in 2 lots and then book your profit, one profit at the first profit itself, the first or the second profit, wherever your Z score falls to at least falls by 1 point or half that, you try to book your first profit. So now I have booked my first profit at 11,000 rupees. So 11,000 rupees is safe. This is what we call as the downturn, drawdown. I think you have actually seen this in this one. This is what is called as the drawdown. Now I have already booked. You have 10,000 on one day. The next day it falls to 6,000. 4,000 is the drawdown. Now here my drawdown is 11,000 rupees. I have already booked. Now my total loss is 3,000 rupees. But I am still in profit. So I will wait for another day, or I will just check what is the price, because 1.62 on some days on an intraday basis it can even come to 1 also. So now my particular Tata Steel price is now 330. So it has risen. Tata Steel we bought. I'll show you again. Tata Steel you have bought 375. Now it is a 330. And JSW I will just tell you. So JSW is at 926 now. So it's fallen by another 2 rupees. So your overall loss is slightly less than 3,500 rupees right now. Now I will wait for the Z score to come down to 1 and then I will exit the trade irrespective of whatever it might, because I have already made 11,000 rupees profit here. But overall my trade will be in profit. But on one particular lot I might lose or I might gain also. That will depend on today's closing and tomorrow's open. Tomorrow let me just check it. If it comes to around 1.1, 1.2, that will be in profits. I will exit the trade. So that is one strategy that you can use. I can show you some calls like this. There are certain calls where your trades, winning trades are 100%. Let me just show you one. So let's say take ACC and Grasim. This is also continuing from some days. I am showing you one each in each sector so that you don't miss it out. So again we have the data for this from 2004, November 2004, that is ACC and Grasum. So let me just come back to the present trade. So this trade is closed actually. I mean I was watching it yesterday, today it's closed. So what it said was on 25th Feb you should short ACC and you should buy Grasum. So your Z score was 3.03. The next day it came to 2.99, so 1476. Next day it came to 2.06. Likewise, it came down and went up, and overall 1.25. I thought it was a good trade yesterday. 12,000 was a profit, but today it's actually closed. That is, sorry, it closed yesterday. 0.7 is your Z score. 81% is your correlation. 20,000 rupees is the profit that you have made, and you can see that ACC Grasum over a period of 10 years at 16 trades, the total profit that it gave was 1,75,000. Profit per trade is 10,000 rupees. So this you can this particular figure, why we are giving this, you can actually fix your losses. You can get prepared for the loss. It's not that every trade is a loss here. Very rarely there will be a trade which will give you a loss. Now out of 16 trades, my 75% of my trades are profit trades. My highest winning is this, my highest losing is this. But my winning percentage is 75 here. So I enter this trade, or you can use the same strategy what we earlier talked about, 2 lots or 4 lots, and then smoothly exit it when it comes to 1. So that's roughly around 20,000 rupees. Like the same average I will take it, 8 lakhs what I have invested. That's a decent profit. So that's around 25% profit. How many days did it take? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 days. That's again 10 days. Usually you have trades like this 10 days. Now we had this trade again on February 4th on the same script itself. This time we had bought ACC and we short Grasum. On February 4th, this was a trade that happened. The trade went for only 3 days. Your Z score started 2.8 and it fell to 0.76 on the third day, a profit of 22,000 rupees within 3 days. So this is how trades happen. So you can keep trading like this, and there are some cases where you will make losses, and why you make that losses is, I will tell you even that. Okay, let me take this particular trade, Bharat Forge BHEL. 61% is correlation. That's a running trade. So you can see the losses here. So Bharat Forge short, BHEL buy, and your correlation is less than 70% there, and your winning trade is also near 70%. Your profit per trade is in minus always, so you don't enter into these kind of trades. So in case if you enter, you would have got a loss of 51,000 rupees. So the first important thing is your correlation. I'll show you here. Bharat Forge BHEL, your correlation is 61%. So that is minus 10%. So you ignore these kind of trades. I can show you many more trades like that. So the first thing what you'll have to look at is the correlation part, and the second thing is your winning trades, number of winning trades. Now coming to zinc and copper. Zinc and copper, we have the data right from 2011 only. So once we get the historical data for this, you'll be getting many more calls. So I will just show you. So again, the winning percentage is 40%, 60% here. So you just ignore these calls. Anything below 70, 75%, you just ignore the calls. I'll show you some good calls in commodities also. So you can just take this lead and copper. It is 82% is the correlation. The 100% winning trades. So all the trades that have come, that is the 5 trades that have come here, are all winning trades. And this particular trade is still continuing. 2,800 rupees is the loss. But you can see that the Z-score is still 2.36. It started at 3.35 and then continuously, for 3 days or 4 days it fell down and then it went up again. So now it is at 2.36. So we should be watching at the end of the day what happens to this. So but here the advantage is 100% winning trades. There is no losing trade at all. But once we get the data for from 2003, I think NCDEX opened in 2003. Once we get that data, we'll have much better calls here also on the commodity segment. So any particular call you want to check? So you will get all these figures. Now whenever we get a call, it will tell you how many lots you like to buy and how many lots you like to sell or buy in a particular trade. That is including the spot market also. Yeah, mining we have, no? Mining we have SSLT. I think you are asking because we are from Goa. So you can see this Ashok Motors and Ashok Leyland and EM. The first day itself, the profit is around 18,900. This is one of the reasons why I tell devise your own strategy. You should, if you have the money, you can definitely do. I mean, there is within no time, I think the portfolio should double. So the first day, Ashok Leyland was a short, EM was buy. The first day itself, it gave a profit of 18,900 rupees. Now, what do we do? If you would have entered one trade, 2 lots in that particular trade, book one profit here, 18,000 rupees overnight. Just wake up in the morning, you have 18,000 rupees in your account. That's fabulous. And for the next trade, you still wait because it hasn't come to 1. It's still 1.92. Your Z-score is 1.92, but you're still in profit. 9262 is your profit even now. So you wait, try to make the maximum out on the second lot. So that is one very good strategy. And in case if you have money, you can put all your money on trades like this. Your winning trades are 84%, your correlation is 80% plus, 85%. Then you are bound to definitely make profits. So, and in case if you want to really understand what is the correlation, this is the correlation. You can see that EM has gone way beyond Ashok Leyland. At one point of time, this was growing and this was actually falling. That was a perfect trade. I will show you some past trade here. So this is a past trade what we had. So here the same thing, Ashok Leyland sell March. This is on March 2014. Sorry, May 2014. Short Ashok Leyland, buy EM. The next day itself, Ashok Leyland fell and this went up 36,000 rupees the first day, 62,000, 61,000 the second day, 68,000 the third day. Now just imagine you enter multiple lots and 3 days you book 3 profits. But overall the call ended at 0.88 and your profit was 21,000 rupees. But so in case if you are not thinking too much about the profits, first day itself we could have booked 36, the second day 61, the third day 68. So these are the calls, these are the kind of calls that you will get. You don't have to do anything. The groups, you asked me mining, right? Yeah, mining we have SSLT, NMDC, Coal India. You want to backtest, I think it's already backtested. I don't think there is any call in Coal India now. Sorry, mining. So mining we have this space, we don't have any calls. But NMDC and SSLT, I think the last call was a profit call. I'll just show you that. So the last call came on Jan 7th this year. So that is a call what you got. NMDC short and SSLT buy. So the call ended at 26,000 rupees profit. So it's the Z-score started at 3 and then it comfortably went down to 0.16, 0.6. It is 0.6. That's a profit of 26,000 or 27,000 rupees on each lot. So these are the past calls that we have. And again you should check the winning trades here is 92%. Out of 14 trades, 92% of the trades are positive trades. So it's very important that you take into factor these two things. I don't see any reason why your portfolio shouldn't double or why you should be making any loss. So this is 1 hour session and so likewise we have calls like this which keep coming. If you have any doubts, you please type it in the chat box. I will close this particular webinar in another few minutes. And if you want to have that material on the paid trading, I can mail it across to you. You'll have to just give me your mail IDs. So settings is nothing but you enter the Z-score here. Now I have entered it as 2.7. So you can even set this correlation, I put it as 0. Average turnover on each trade I put it as 8 lakhs. So that is correspondingly I even calculate the profit for this 8 lakh investment only. Exit days I have put 45, but usually trades don't go till that for those many number of days. And Z-score exit, Z-score I just put it as 1. You have seen that from it can start from 2.7, it comes to 1, you will have to exit. The lot size I always put it as 1. So these are some settings which by default you can have it. And my trades is nothing but once I get the trades, I choose that particular trades and then try to put it in my trades. These my trades are the trades that already have occurred. Some ACC and Abuja was a very good call. It closed recently. It's 90% is the correlation. That was a lost call. So we had this call in July. It ran for 4 days with 24,000 rupees profit. And again we had this call. June we had one call, in July we had one call, multiple calls on ACC and Abuja. This ran for only 3 days with 21,000 rupees profit. And again we had this call which ran for 5 days with 19,000 rupees profit. So you'll be getting all these multiple calls, you'll be getting the notifications also. So it will become very easy for you to trade. So this call ended on February 20th, Feb 10th. It got generated on 16th. So the final profit is around 23,000 rupees on each trade. So the loss calls I told you, in case if you are taking trades less than 70%, that will definitely be loss calls. In some cases you might gain also, but it's always better to avoid those calls. So thanks for coming. I'll just wind up the session for now. And in case if you just want to watch this again, you can just I'll upload it again on your YouTube so that you can have a look at it again. Thanks for coming. Thank you.